Okay, we have to do a beginning of there. Welcome, everyone. I want to thank you for attending. Okay, we're just going to start from the beginning again to record. Primarily, we believe by using our fundamentals, technicals, and astrology, you're less surprised by markets. So we're going to go over them. We're going to talk about whether or not we should go May 2025 and go away, as we do most years, but did not last year, and have a very unique answer this year. We'll also be talking about gold and silver price forecasts, which we're quite good at. Financial astrology, we'll put a little more in because people have asked me to. A few good stock ideas and questions and answers. We also have 6 sponsors, and we hope that you'll find them interesting. We just asked for a 2-minute to 3-minute high-level pitch, and if you like it, please go to their websites and put them on your trading and investing screen. Some of them may make you a lot of money. So the big 3 questions we have at the moment: is it likely the market bottoms in? Is a retest of the lows coming? And if so, when? And we'll be giving you our answers at the end to keep you interested. A disclaimer that you must do your own homework. Regardless of what we say, you're responsible, or you should be working with your financial advisor. There are 3 primary drivers that have been going on for the months. Big man moves. Multiple crises in the beginning of 2025, and that's going to continue. There'll be a partial resolution by mid-May, especially. We've been saying that the last few days, and you notice how we went net long rather than net short. And then finally, the economy is slowing. We had 1 quarter of a negative GDP, and whether or not we're in an official recession, can it be recession-like? Now, for housekeeping, we are recording this on our YouTube channel, Henry Weingarten. We do this so you don't need to take notes, and also so you can review everything. You're free to invite your colleagues and friends to watch it. And of course, if you subscribe to the channel, then you'll be giving notifications. At the moment, we'll be doing 4 of these large presentations, and also a few very short ones. So, and if you have questions, please put it in the chat room, and as appropriate and as time allows at the end, we'll answer some of them for you. So, going back to our last time in March, we had suggested that the big picture euphoria that we saw in the first half of the year to February would be over by the first quarter, and as you know, it was definitely accurate, and that people would have recession fears, if not recession. We also talked about volatility, spring and summer, and it's a stock picker's market and a trader's market. No question about all of that. Now, of course, the market's changing again, and one forecast which is already happening, there was no question that oil, eggs, and interest rates would be lower before November 26, and of course, they're already down. So, if you're a little conservative, as we are, and concerned, as we are, then we have some general ideas, and we'll go to specifics. Precious metals, as investments as a hedge, stay positive. Stress, distress, and M&A, also increasingly positive. Companies with solid dividends or recession resistance, such as entertainment, does well. Profitable companies with pricing power, and most especially special situations. And we'll be emphasizing special situations, because whether the markets are up or down, a special situation is a special situation. Now, as you know, the government analysts were surprised by expecting plus 0.3 and getting minus 0.3. We, however, were not surprised at all, because we don't just look at government GDP figures. We look at things like the beauty salon recession indicator. And anyone who checks that with massage therapists and beauty salon people know that people are cutting back, and they're choosing cheaper services, tipping less, otherwise canceling appointments. Or as one person, they've been eliminated from their budget. So that's an earlier indicator that you want to keep your eyes on. But there are even a better indicator, and that is tracking sex workers, especially if you're based in Las Vegas. So the Brotherly Index is the spending is down, so we were not surprised first quarter, but a better index than the brothel is the stripper index, because dancers are obviously not a priority and they're the first to be tossed aside. So all of this gave us lead ideas that yesterday we would see a negative number, and of course we did. So we weren't surprised, and if you track what we track, you weren't surprised either. So we will see bond and stock volatility continue. We will see slower growth and recession talk. So what we're going to be seeing is stagflation light, changing more to recession and deflation over the next year. We're not there yet, but the difference is now, before there was a U.S. exception, now there's no U.S. exception. You watch out for shrinking inflation and dynamic pricing. So, for example, the price of a New York pedicab has gone up to $9 a minute, but there are some pedicabs that are $3 a minute. Other pedicabs are fixed fee. What do we track? So again, multiple crises, partial resolution, slower growth. That's the big picture. Keep it in mind as we go forward. Trump tariffs are a big deal. Some people think as important as going off the gold standard in 1971. And this is going to be something we're going to track. But we track it probably a little differently than you do. We also took a look at the horoscope of the Liberation Day. So, for example, for those of you that do a little astrology, you could have looked at the chart for April 2nd, 2025. You may not know how to interpret that, but there are three big areas there. And the big areas there, which we'll get to in a second, we won't go over the astrology part. For those who know astrology, it's there. But the translation is to expect the unexpected, many surprises. We know that now. It's going to continue. Number two, it's going to be successful, folks. That you may not realize, but it's going to be changeable. And number three, it's a very difficult enterprise. And again, for the astrology, the Uranus midheaven, the Moon-Jupiter conjunction in Gemini, and Mercury, Venus, Saturn in Pisces. But the point is, it will be successful. Keep that in mind. That will determine what you buy and what you trade and what you invest in. So we've gone from previously U.S. exceptionalism to U.S. alienation, which is what you're hearing in the press, as global investors dump U.S. stocks at record pace. But that's about to change, folks. Don't be caught up in the past. That's old news. So, yes, there will be recession-like over the next year. Some people are going out of business or going to Chapter 11. That's important. But as Warren Buffett says, bad news is an investor's best friend. Be fearful when people are greedy. Be greedy when others are fearful. Okay? That's very important, and that will continue. Now, is the Sell America trade over on pause? I think it's going to be pausing very soon, and I think later it will be over. The answer is Trump's astro. So unless you look at his horoscope, I think it's very hard to know that. But it's definitely a big issue. So what I'm going to give you here for a little time to read is one of my students. I'm a little biased here, so I want an objective view of his horoscope. And what it is Trump is going to be having some legal victories coming up, getting better by mid-May, and that's one of the reasons we're positive in the market now. And by the end of the summer, it's going to be a mixed bag, but he's going to have some very big victories. So those that are Republicanly minded are going to be happy. Those that are Democratically minded will be unhappy about that, but be happy about their portfolio. So you have a choice. We've talked about the astrology. The big part that's going to be the shift is that the times of the Jupiter-Saturn square, which we had the August and December downtime, and then June. June can be a resolution or another downtime. We also have a Saturn-Neptune, which we'll talk about, that comes in the summer and goes next year. That's going to be a yellow alert time for the markets. So, this is the big question. Do we sell in May and go away? For the first half of the year, absolutely not. Between now and May 15th or so, we definitely don't want to sell. We want to be buying. We'll give you some numbers. However, once we get sometime in the second half, possibly even early June, we may want to sell or hedge, although we're generally hedged anyway. So the answer is don't sell now. You should be buying now, or at least buying more than selling. But as soon as we get to the second half into early June, you want to be potentially hedging long, short, or raising cash. So what should we be looking at? If you have the views that I do, we like gold and silver, but not exactly what you're thinking, which we'll talk about in a moment. We like entertainment. Remember, gold and entertainment did extremely well even during the Depression, and we're not saying we're going into depression. Still maintaining cash, especially as we get to the second half of June, for income, distress, deep value, and special situations. The risk is the Saturn-Neptune, and the images you would have is the fall of the Berlin Wall, it's a rock on a cloud, or what happened with Bre-X. We predicted the Bre-X mining disaster 2 weeks before, got our clients out based on this aspect, which will be in the winter of next year, exact. Whereas in the summer, it's near exact, so it may not happen. But you have to be cautious. There's yellow alert risk after we get into June, July in the marketplace. Stock and commodities. Obviously, stocks up until recently were way overvalued. Commodities undervalued, and we believe that will be shifting. This is where some of you are going to disagree with me, but it's correct. The point is gold's fair value, it's way, way overvalued. Now, that doesn't mean it can't stay up. For many years, gold and silver were way undervalued. But what's happening is it's trading as a crisis. And our view is that crises are going to be reduced very shortly. If I'm correct, then it will drop significantly, which is why we're short basically from 34 and 3,500. And as a currency, which people are saying, it's still way overvalued. So so we stay long the stocks, but quality gold and silver stocks will outperform gold and silver, and we'll talk about how that's going to happen. And unless something like the World Gold Council does a real gold crypto, we won't see things like 4K this year. So, one of the aspects we lose are technical analysis. And as we see, we just went over the 50-day moving average. Let's see where we are in a moment. I should have this on my other screen. Give me a moment, please. Okay, we're at 56.13. So we just broke today the 56 moving average. And if you look at the 200-day moving average, we're still not with strong go forward, but we'll be attacking those numbers very shortly. We'll explain why. So keep that in mind. We're just getting to the point where technicians are getting interested in the marketplace. But if we look at the Buffett indicator, we'll see that markets are significantly overvalued at 186%, which suggests a return of less than 2% a year going forward. So if you're a value investor like myself, you're not comfortable. Even though the markets are going to be going up shortly, and one has to be net long or trade long, they are overvalued with significant risk coming up in the next 2 months and then next year. So keep that in mind. Way overvalued. That doesn't mean they won't stay overvalued, but it means it's risk like we saw before. Now, fundamentals don't matter until they do. So the current valuations, gold, way overvalued. Silver, way overvalued. And remember, we're going to have a global recession scenario-like environment. Copper, we suggested selling at 525. Now, oil's interesting. Oil's the only thing that's undervalued. It's right now, we're trading it and buying it at 56, 58. But it belongs short-term 66, but it will eventually go back to 70 in the next year and a half. So oil companies are on our buy list. Bonds, where's much higher, but we're going towards 4. If we get to 3.8, we'd stop buying them. The S&P and NASDAQ are currently overvalued. For a short period of time, they were nearer value, still overvalued, but not massively so. But they're still out of line. They will go higher, but they're overvalued. And that at times means that represents risk. So when I'm giving you my stock picks, we realize I'm a cosmic value investor. I want to buy something that's undervalued. When it's overvalued, I want to protect it, write calls, have trailing stops, take profits periodically. I'm not a momentum trader. I mean, I can be a momentum trader, but I'm not a momentum investor. And you're in for wild rides this year if you stay that way. So this is giving my bias. So what I'm going to give you is 1 or 2 pitches from our companies. They're very short, so you can decide which ones you're interested. We'll have 1 or 2, then I'll continue my presentation, another 1 or 2. All of these, I believe, are worth tracking. But you have to make your own decisions here. The first one we're going to give you is a company that's all seasons. It's Acme United. It's one of our favorite stocks. It's a U.S. global manufacturer that's participating and benefiting from U.S. reshoring trend, number 1. It's financially well positioned to grow, and most important, to acquire more companies in distress as they have over the next 2 years. Number 3, it's in the consumer defensive sector, and that's a safe haven. If you, like myself, think that everything's not going to be wonderful, these defensive stocks have consistent dividends and stable earnings regardless of the overall state of the market. And most important, for another reason, is it's transferring into a health sector stock with first aid kits, safety solutions, and it's increasingly a major part of its business. So there's a lot there to talk about. So I'm going to give you an example of one. Let's come here. Let me just 1 second here. I've got to shut off. Okay.
Hello, I'm Walter Johnson, Chairman and CEO of Acme United Corporation. We're one of the largest suppliers of first aid products in North America. We also have a second business, which is cutting tools. The leading brand is Westcott. We have about 70 million scissors that we produce a year. You probably have one in your desk. Both businesses are really terrific. They generate cash. We have leading market shares. In the case of the first aid products, there's a large recurring revenue stream that occurs because the components expire, they're used, and some of them are taken. And every first aid kit that's in an industrial site should be current and up to speed and up to date. Our automated refill and replenishment system, called Smart Compliance, allows this to happen to many, many large industrial suppliers seamlessly without having to have somebody come in who's driven a van and loads those cabinets. They save typically 1/3 to 1/2 over the leading competitor, and we've been growing very well in that category. In 2024, we had revenues of just under $200 million. EBITDA was $20 million, and net income fully taxed was $10 million. We've had 14 years of consecutive sales growth from continuing operations, and we're looking forward to this year to making that the 15th. We think we are undervalued. We're currently trading at 9 times EBITDA. We're hoping, and I'm working to have, growth of $100 million in the next 4 years with EBITDA margins of somewhere around 12%. Our balance sheet is strong. We're looking for accretive acquisitions, and I personally think we represent an undervalued opportunity. Thank you for listening.
Okay, we're back. A good company to look at. Okay, now we're going to go forward. Now, it should be no surprise that if you know what Trump is going to do, then you have an edge in the marketplace. Now, we don't know everything he's going to do. We're occasionally surprised, but I believe we're much less surprised than the average investor. Why? Because we have his horoscope. Now, what's interesting about Trump is everyone knows he's the most pro-stock president we've ever had. So everyone was very bullish as we got to November and December because less regulation and lower taxes is good for business. And he measured success in that. There's no way he's going to deliberately be bad for the stock market. He's not a communist. We know that. So let's see what it has to say. So if we look at what happened and we see where he was, he's looking at, and we haven't talked to him about this, where the market was November 4th, where it was December 31st, where it was January 20th. You know, most of what's going on in the press is nonsense. Okay, so the first place he's going to get to is the S&P is going to go to 5712. The second place is at least to January, and the 5881 is, actually, December 31st. We're likely to get that far in the next 2 weeks. I don't think we're going to get to the 6,000 level, although we're likely to see it later this year. But in any case, there's definitely more upside where the markets are going for it, and so is the president. So keep that in mind. That's his thing. I don't think we're going up to 6,500. Most people have lowered their targets to 6,000, 6,100. We'll talk about targets later. We have a very, very short webinar coming up in 2 weeks. But effectively, these are the numbers you must be watching because he's watching you. Now, we've said before, gold has done very well, silver's done very well, but now that's going to be changing. We believe there's not strong support for gold at 3,000. We jumped to 3,500, which Macquarie, by the way, called quite correctly, but it's not been proven. If you're a technical analyst, yeah, we're testing 32. We tested 3,400 broke. We tested 3,300 broke. We're testing 3,200 today. And when the Ukraine peace comes forward or tariff truth comes, forget 100, 200-point drop. We are going to be testing the 300. We suspect that it probably won't break 2,600, although 2,400 is possible. Why? Because market gets exaggerated. Remember 2-3 years ago, natural gas $10 one year, $2 the next, when it really belongs around $3.50 to $4. That can happen with computers. So don't think just because everyone's buying it's going to stay up. Long term, yes. But if we're talking in the next 2 years, not necessarily. So we expect, we're bearish at the moment in gold, but not on gold stocks. Silver likewise, despite the fact there's a large gold-silver index. Why? Because silver is also an economic metal. And if we're correct, which we are, that we're in a global slowdown, that's going to affect silver use, even though fundamentally it's good. There's no silver shortage, really, unless you take investments into account. But it is increasingly good, and certainly for long-term investors. But a global slowdown is not good for silver, and unless there's a geopolitical crisis, short-term, gold is going to test more support levels and bring silver down for the ride. Think about that for a moment. I'm not suggesting selling your stocks, but being ready to buy them when they're down. So, when is a good time to invest in gold and silver? I would say now for the stocks, although I'd be waiting a little bit because there's more downside. So, the point is, even with a 10 to 25% drop in commodity prices, which we've almost already had in gold, quality metal and mining stocks have deep value. So you want to track good companies. They are going to do well over the next 2 years. We're putting our investor hat on, not our trading hat. So let's take 3 mid-cap, large-cap stocks that are favorites to us. Agnew Eagle, I always find it very expensive, but an #1 company. TRX Gold, which comes and presents for us periodically, the only South African stock we like, and one of the few seriously SRI ESG stocks that we like, and Kinross, very solid company as well. So let's just take a look at the chart of them. So again, these are 3 we like. Notice the outperformance that you see. And this is true for lots of gold stocks. You get up to another 50%, in some cases 100%, if you choose well. So stock pickers will outperform. I want to point that out. Those of you that are worried about gold and silver being taken away from you, forget about it. It's not going to do you any good. You need guns and you need food, if that's what you're worried about. And you don't want the world with $5,000 gold. Certainly not in the next 2 years in any case. But the point is, over the next 2 years, quality gold and silver stocks. Now, initially, they're going to drop more, just as when, but if you're bullish now and you think gold and silver is going to go up now, which I don't, but if you do, then you want to buy the stocks because they're going to outperform. I can guarantee that. If I'm right and they're going to go down first, then you wait a little bit and then they'll outperform as they go up. Very important, different from what you're hearing from most people. And since Bre-X days and beforehand, nobody has a record better than mine on gold and silver. Now, people have good records, of course, but no one has a better one on timing gold and silver because we don't buy the Kool-Aid. It's a commodity. It's a commodity that basically anything you produce, you sell. You just can't control the price. And if you hedge dynamically, or which most of them unfortunately don't do, and treat it as a business, you make lots of money. So we watch lots of stocks. You've seen it doesn't matter. The point is we're looking all the time on our list. One of the things very interesting we decided to put in our list, and I just saw today Wainwright just doing their own first royalty conference, is royalties. Because if you're defensive, a good royalty company is a good form of protection. Now, unfortunately, when we went to 2008 and the markets went way down in the gold and silver, royalty companies well outperformed because they were all quality companies. Now there are quite a lot that are not quality companies. You have to watch it. But 3 that we like, EMX Royalty, Gold Royalty, and Wheaton Precious Metals. Take a look at those 3. They're very good defensive, but they will outperform. But I find it very interesting that that just happened timing. So we just, again, you can also look at any of our previous webinars for different ones to look at. Now, I'm going to give 2 companies in gold exploration. Gold exploration is like biotech. You're shooting not for a double, you're shooting for a triple. There are over 12 to 1,500 companies alone on the Canadian exchanges. At best, 10 to 20% have a shot. The rest are like buying a lottery ticket if you're lucky. But we're going to give you 2 that are better. In fact, they're not really as risky because they've done a lot. One is Angus Gold, which has a consolidation strategy and was just recently acquired by Wesdome, which we're going to be looking at because of this acquisition. And then we're going to be looking at TRX Gold, which has production growth as well as tremendous exploration success. So we're going to show you 2 now that could be very valuable. These are higher risk but much higher reward. And these are good companies, in our opinion.
Hi, my name is Brienne Bay, and I'm President and CEO of Angus Gold. Angus Gold is a Canadian junior gold exploration company with their main project located in Wawa, Ontario. We have a 290 square kilometer land package that's adjacent to Westholme Gold Mine's Eagle River Mine. It's the first time that this land package has been consolidated under one operator, which we believe has left it underexplored despite its proximity to well-established infrastructure. Since 2020, we've completed 40,000 meters of drilling that have been focused on two gold targets, the Dorset Zone and the Biff Gold Zone, where there have been 24,000 meters and 12,000 meters drilled respectively, with some highly prospective results. We've defined 3 kilometers of strike length of near-surface gold mineralization between these two zones, with our best hole being at Dorset West, where we intersected 7 grams per ton over 12.5 meters. On April 7th, we announced that we're being acquired by Westholme Gold Mines in a definitive transaction valued at $40 million Canadian. The deal is structured with an 80% cash component and a 20% stock component. The terms of the offer, which can be viewed in detail in the April 7th news release that's posted to our website, www.angusgold.com, represents a 59% premium to Angus's 20-day VWAP. Westholme currently owns 10.4% of Angus's common shares. This transaction really is a testament to the dedication and diligent work of the Angus team, especially our exploration team. In the short time, with only 40,000 meters drilled, we've made significant new gold discoveries. Dorset West has definitely been our most exciting of these, where we've intersected the Dorset Gold Trend as it moves across a lithological contact from mafic volcanics into a metasedimentary rock package. Here we're seeing a much higher frequency of visible gold in the quartz veins than we've ever seen before on the project, and it is extremely encouraging as we continue to step westwards and build strike length on this new zone. At the Biff, or Banded Iron Formation Gold Zone, which was an Angus discovery as well, made in 2021, we've defined 1 kilometer of strike length of the gold zone that's exposed at surface to true depth of about 250 meters. And we still have 5 kilometers of strike length in this area left to explore. And we believe that really gives us the potential to find another parallel gold zone. So, for further details on Angus Gold, please visit our news and presentation page on our website, again, www.angusgold.com. Thank you.
Hi, my name is Stephen Maloney. I'm the Chief Executive Officer of TRX Gold. TRX Gold is listed on the New York Stock Exchange American as well as the TSX under the ticker symbol TRX. We are an emerging producer in the Republic of Tanzania, in which we operate the Buckreef Gold Project. The Buckreef Gold Project has over 1.5 million ounces of resources at around 2.5 grams a ton, and in fiscal 2024, we produced over 20,000 ounces and $40 million in revenue and $15.3 million of EBITDA. This is just our start. We just released a preliminary economic assessment, or PEA, which indicates a 16.7-year mine life at 62,000 ounces per year at a very low cash cost of around $1,000 an ounce and all-in sustaining cost of $1,200 an ounce. How are we going to execute this? Well, we've already done 3 expansions to the current capacity of 2,000 tons per day. The PEA contemplates another expansion to 3,000 tons per day, as well as an open pit mine life for 2 to 3 years, which will then go to an underground mine life for the remainder of the deposit. This is what's on the known resource in the Buckreef main zone. It doesn't include our recent discoveries, which have our best drill hole results ever in in Stamford Bridge, as well as in the Anfield Trend, which is just adjacent to the Buckreef main zone. So we're really, really excited for the expansion potential of our property, as well as the expansion potential of resources through the drill bit as well. How is this paid for? Our current expansions to 2,000 tons per day were paid for out of free cash flow. The PEA anticipates and contemplates the potential to finance this project internally and to continue that expansion over time. Again, we are very excited for what we're doing here. We have a very strong leverage to gold prices as we have low cash costs. We've experienced operating cost reductions in our expansions to date. We're going to have continued growth in production profile over time as we continually expand. We are looking at those larger operations and reducing those cash costs even further than what I quoted, and we have a lot of blue sky potential. So we're really, really excited for the future of TRX Gold. Look us up at www.trxgold.com. Thank you very much.
All right, we're back again. More information. And one of the things they just mentioned, of course, is leverage to gold prices. Not only that's very important. One of the reasons they outperform. So it gets. Okay, two very good companies to look at. Now, silver. This is my viewpoint. Why would you want to buy silver over $30 when you can buy it for less than $15? I'm a New Yorker. We were trained to buy wholesale, not retail. So there are quite a number of good silver companies. We have, actually, there's some more we're going to be including shortly, but I'll give three. One is Max Silver, who's one of our sponsors, has been for 2 years. To me, it's one of the most underrated silver companies out there by far. Abra Silver we like because it's in Argentina. We're looking for an excuse to go there. One of the things you should have to do is eventually visit these companies. And I want to go to Argentina because I'm a wine writer and I'm also a tango dancer. So they'll be coming, I think, in the fall to visit us in New York. But I definitely, if I don't go in the fall next year, I want to visit them. And Brazil Silver, which is another company that comes to us all the time, that's also incredibly so that they have a better than 86% return on your money. When it's just unbelievable. So these are the three companies. We'll be giving you some more that you may want to look at. Now, Mag Silver. I constantly mention Mag Silver. Why? Their cost of silver is under $1. Their all-in costs are under $6. Now, of course, on a day like today, it's down, but don't worry about it. They have good marriage, and right now it's a little expensive, but as it comes down, I'm still holding it. We'll be buying it again. Anything under 13, I have to look where it is definitely good. But they have major exploration upside. That's why you want to be interested in this company. So right now it's a little bit under 15. It's cheap, but if silver comes down where we think it is, anything you can get. We bought it 9, we bought it 11, we bought it 15, we bought it 15 and a half. We just keep buying it because we believe not only is it going to get to 18, but we think it's going to go over 24 and higher once they have some discoveries. So listen to yourself, make up your own mind. Definitely it's one you have to watch.
Hello everybody and welcome to Mag Silver presentation at the A Fund of May 2025. I will be making some forward-looking statements today. I draw your attention to those. Mag, we're a pretty straightforward company. We have 3 assets. The Juanicipio mine in Mexico that we've been operating since the first quarter of 2023, the Deer Trail exploration project in Utah, and the Larder exploration project in Ontario. We're focused on advancing high-grade district-scale precious metal projects in the Americas. And you can see here we're in a great position here. We have $162 million in cash, no debt, and lowest decile all-in sustaining cash costs. On the left, there's the Juanicipio mine that sits in the Fresnillo Trend, the most prolific silver district in the world. It's operated by Fresnillo PLC, world's largest silver producer, who own 56%, we own 44%. And you can see 18.6 million ounces produced last year. It's a really robust, big, long life mine. Deer Trail, it's a 100% earn-in. It's polymetallic, silver, gold, lead, zinc, copper, and we've had some interesting drill results there already. And at Larder, it's gold-focused in Ontario in a great district, and we're looking forward to some drilling, follow-up drilling on some prospective surface samples there. Focus on Juanicipio, the ATM. 75% of the revenue comes from silver. It's a real silver mine. 85% is precious. 468 grams per tonne of silver for 2024, extraordinary high grade. It beat our revised guidance, and wonderful cash costs, 88 cents per ounce of silver produced, all-in sustaining cash costs of $5.54 per ounces of silver sold. Here you see the graphs are all flattening out, that steady state operation now. We generated $292 million in free cash flow in 2024, returning 119 to MAG. Again, the costs are phenomenal, and it's not just a one-off good year at Juanicipio. The graph here on the left shows the life of mine cash flows in blue based on $22 per ounce silver. The green bars show analyst consensus at the time when we put our technical report out of $25 per ounce. And you can see that we just have robust cash flows, life of mine. Current metal prices of 33. Obviously, the bars are bigger. That's great. But you can see on the right that the production is consistent in terms of equivalent ounces of silver produced for the life of the mine. Wonderful costs, great margin. We're going to build a lot of cash. So why MAG? Juanicipio is de-risked. It's a high margin, long life asset. We have a very robust balance sheet. We've just announced a handsome dividend policy. We have exploration upside on our 3 assets. As good as Juanicipio is, we've only explored 10% of that property. We've got the rest to explore to try and find another upwelling zone like we've found already. And then the 2 other exploration properties are showing indications of potential exploration success in the future. So if you want to find more, www.magsilver.com. Thank you for your time.
Okay, there we go. Okay. So, MAG Silver. Now, another area that we like, and there's a few companies we'll be adding shortly, is in the media and entertainment space. If we are in a global slowdown over the next year that will last more or less, and considering the amount of debt in the world, certainly the case, then people will do well with entertainment. 3 classic ones that are not necessarily going to make you a fortune, but you do well: Lionsgate, National Sin Media, and Netflix. There are a few others on our list that will be moving to our buy list. But it's something you want to add. Again, if you have the same views that I do of what the big picture is, then you want to add some media and entertainment. Not necessarily more advertising, though. Although there are some advertising new technologies that will do well. Another area is aggressive healthcare. There are 2 we're going to talk about. One is Jaguar Health, which is one that presents for us often, and we'll discuss that in a moment, and Context Therapeutics, which would be presenting in New York for us later in the month. And one of the things we'll be adding is we do 3 companies every month live in New York. We're going to have them do a 2-3 minute presentation. I'm going to discuss it, plus the market changes. So we'll be doing about 5 or 6 mini things for about 15 minutes. If you register on our YouTube, you'll be able to catch it. So let's take a look at Jaguar Health. What we like about this is, and this is for traders especially, we like biotechs that are down 90%, but are not likely to disappear. Sometimes you go down 90% and it disappears. Now, why we like that is if they have fresh good news. How many days is that? Effectively, you get a quick double or triple. Now, here we have one that if you look at the charts for 5 years, you'll see that the break, which the market fulfilled as technicians would expect. There's a big trading gap, but it's one we track for several reasons, because they have a large pipeline. And if you looked at where it happened in the last week, you will see it went more than triple. And we expect more to happen. So let me give you, this is a little detailed one, because it's just going to be the one good piece of news they had this week. And fundamentally, although we're not always happy with the way the stock is managed, but fundamentally there are many good situations here to look at. So.
A few moments ago, we released initial results from a proof of concept study for intestinal failure associated with MVID, microvillus inclusion disease, an ultra-rare disease, and intestinal failure associated with SBS, short bowel syndrome, another rare disease in pediatric patients. In both situations, intestinal failure requires total parenteral nutrition, which is going to be referred to throughout this webcast as TPN, at least 50% of the time, IV nutrition. For MVID patients, TPN is necessary from day one of birth to survive, and that need does not change during their short life. A short life due to complications of liver, renal failure, IV line complications, among others. The biggest impact one can have on a patient with intestinal failure is reduction in the quantity and time of TPN. And these results that we have out today show that crofelemer reduced TPN in the MVID patient by up to 27% and 12.5% in the SBS patient. These results, in the words of frontline healthcare professionals, HCPs, healthcare professionals, are groundbreaking medicine that have the opportunity to modify disease progression for a catastrophic patient condition, intestinal failure. Why that is important is best expressed by the principal investigator in this proof of concept trial and the real-time reaction of his colleague, a key opinion leader, a leading investigator and practicing expert healthcare professional of pediatric patients with intestinal failure. We have an impactful session here today where you will hear directly from them in a fireside chat.
Microvillus disease, in the simple word, is a genetic disease. The only way actually to treat this disease is by giving them parenteral nutrition, i.e. to give them their feeding through venous rods throughout their life. Unfortunately, so far there's no cure for this disease. And we are always concerned about the quality of life. There is no other treatment or prospect of treatment apart from having total parenteral nutrition. This comes with the consequences of having complications with the lines themselves, the liver, and end up sooner or later for me or multivisceral hospital. Any reduction in the dependence of the parenteral nutrition means a lot for these patients. The initial results are very encouraging. Our patients are doing very well.
All right, that's a little technical, but it's a technical company with a lot of good fundamentals, those that you know it. Okay, we're getting closer to the end. We're almost ready for questions. We have a few more slides, not many more. So this is a company that we're not going to be, it's one of our sponsors. It will be actually presenting for us in New York, that we recommend tracking. You may recall about a month ago when markets were down, those of you that track the top 20 billionaires, only 2 of them were up in their portfolios. I think you can guess one of them. Obviously, Warren Buffett, who's a value investor, and when things are very difficult, he outshines. But the other one is L'Oreal. And why did L'Oreal do so well? Because the cosmetic industry is highly profitable, but also highly competitive. Now, this particular company we're dealing with also deals with L'Oreal as a relationship, but the basics that you're going to be hearing about is AI and cosmetics. And if that, I don't think I need to say anything more than that. But much more than that, if you go look at their website, I recommend tracking it. Put it on the screen. It's a little early here. But it has multiple shots to the brass ring, at least 3 big ones that I know of and 4 small ones. I strongly recommend putting it on your trading screen, watch it, sign up for it, and hopefully it will become good. But at the moment, it's very early on. So, one of our 2 favorite cats says, be cat-like, accumulate, buy on weakness, and that's what we're talking about in the gold and silver stocks. Very shortly we'll be doing it. We'll be giving numbers later. But effectively, if you disagree with me and you think gold and silver is going up, you will get a bang for your buck with the stocks. You'll be buying gold and silver cheaper. But if I'm right and it goes down, there'll be deep value trades. Plus, make a list of your favorite stocks and commodities. You have some idea of what one of the bottoms are like. Start tracking it. Have cash available. Now, not everybody's going to agree with what I have to say. Is the market likely to bottom in? I don't think so. I believe it's good to hedge, be long short, but in this case I would be more long. For the next 2 weeks I'm long, so you don't need to hedge. But as we get to the period of June and July especially, you want to be defensive. It's yellow alert time. Nothing may happen, but it may. Will a return of the lows coming? I think so. When? Either this summer and or next winter. Okay, so think about this. If you have my views, you'll be a little cautious, and people will be rotating their portfolios, not going all to cash, but going to companies that do well, such as the ones we presented, or are special situations. And there are other sectors we could be dealing with as well. So here's my latest tweet for those of you who like to know what we're doing, and you'll notice we're basically short gold from 2355 and 3500. We're basically long the S&Ps. MAG I like because it's a favorite, even though it may go down to 13. We'll probably buy it again. And everything else. The only thing we'd be buying here right now would be oil. And we have some favorite oil companies we've given you before. So, before we go to questions and answers, there are anything? May 15th, we have our next 3-stock lunch. We will present the 3 companies online with 2 to 3 minutes. I will introduce them and also give you a quick market update. If you subscribe, you'll know about it. And then our next big 1-hour presentation will be August 19th when we give our full updates. So, we want to give you to make more money with less risk. We believe they were there first, and we believe by using astrology, fundamentals, and technicals, we get a stellar performance. So let's see what is here, if there are any interesting questions. Give us a moment. Okay. Oop, I don't know if we have any questions. Aha. Nope. Quiet audience. Okay. We're going to be done. I want to thank you all. Please review it as you wish. We recommend being cautious. Short term, markets are up, at least for the first half. Then, somewhere over the next 3 weeks, we'll suggest probably reducing, shorting, hedging, with a risk time for another 2 months. We'll give our views then in August, what the fall will be like. But regardless, in the winter of next year, you definitely want to be very cautious. And then we get bullish again. Up and down, up and down. We initially thought the markets would either be an M or a U, but instead it's like a seesaw. Up and down, up and down, up and down. So traders are having lots of fun. Wish everybody well. Take care. Wait a second.